Forgive the beginning. Let's start over. Let's get ready to rumble. Hello, everybody. I hope you're doing well. Hopefully, the sound is working okay. Once we get a few more people to join, I'm sure that somebody will comment if the sound isn't working. Anyway, in this corner, we've got Donald Trump standing at 6'6", 200 pounds, 8'4" with the comb over. And in this corner, we've got Jerome Powell standing at, I don't know, 6'2", weighing what looks like about 30 pounds recently. To be perfectly honest, I'm a little bit concerned with Mr. Powell. That being said, they've gotten into this bit of an argument recently, which actually really bothers me. And it's kind of why I brought it up and even put it as the title, because I try not to get into politics too much because I don't want to offend anybody. But overall, I generally kind of like Donald Trump. I don't mean I like him, and I'm not one side or the other. If I went back in time and still had to make the decision between Harris versus Trump, I would still lean towards Trump. But this thing going on with Jerome Powell really bugs me because I think it's a total overstep of the Department of Justice along with what Donald Trump is doing. And I know those of you who hate him will go on and on about of like what a surprise and how that shouldn't. Um, yeah, I see that, Joe. That's okay. Just give it a little time. Maybe more will show up. But uh, it's just such an overstep for him, and it bothers me on that way. Hi, Lily. Hope you're doing well. That is not what the Department of Justice is supposed to be going after, like, quite honestly. And then if you go into depth about it, when I watched a discussion from one of the people on CNBC, it was talking about, do you really think that Jerome Powell is spending his time going over the budget of the expansion, or do you think he's actually focusing on the economy? And my guess is he has very little to do with the costs and the budgeting of the remodel that they're working on. So it just isn't anything that he's even paying attention to, which is part of what goes along with the nonsense of why are they even looking into this, which it's just fine. It is what it is. And what are you going to do about it? I half wonder if it's a little bit more of a threat to whomever comes in afterwards that's going to be the next Fed chairman to really put it down like, hey, you better do what I say, or I'm going to sick the Department of Justice after you, which I think is totally overreaching and kind of what uh-oh, I'm guessing the sound isn't working. Let me try undoing this. I may have to start over. Any better? Is the sound working now? Better? Not better? Good? Bad? I may have to cancel and start over. The same thing happened the other day. If there's no sound, there's just no point. Yes? No? Maybe? Hello? $20 lb. I don't know what that means. Is the sound not working still? Hello? Oh, okay. Well, I'm glad somebody can. Perfect. Okay. Anyway, what bothers me about it is it makes me kind of wonder about everything else that's going on and whoever else the Department of Justice is going after. Since, to me at least, it's such nonsense that they're going after Jerome Powell, who I actually thought he handled it really well. So either he is one of the most calm, cool, cucumber criminals out there, or it really is a bunch of nonsense that he's super not worried about. He's just going to focus on the economy, which is kind of what his job is and why I liked his response. Again, I do worry more that it's more about whoever's coming in next and kind of flexing Trump's muscles about if you don't start cutting rates, that I'm going to send the Department of Justice after you or do whatever I can to try to get rid of the Fed. And it's really important that the Fed is actually a separate entity because they shouldn't be controlled by the president. Now, generally they end up doing what the presidents want, but for the most part, any president, whether it's Trump or anybody else, just wants them to cut rates. The reason to have them separate is you shouldn't just be cutting no matter what, because you're going to create an inflationary scenario. You're going to create a huge boom, which might sound really good, but any big boom that comes along like that is going to have a massive correction afterwards. So if you just force lower rates when they aren't really needed and push the spending overboard, that's an overall not good thing. So this whole thing between Trump and Powell is so silly. I'm very glad to see that a lot of past Fed chairmen and other people are coming to the plate, defending him, talking about how ridiculous this actually is, because it is absolutely nonsense. And that's where I say what kind of bothers me about it is then when you go into the things that I didn't think was nonsense, like the stuff going on in Minnesota that looks really bad, all that stuff that Nick Shirley broke, it kind of makes me start to question, is that stuff legit or is that just a witch hunt too? It's hard to imagine it isn't. Those places looked like they were completely empty, receiving millions of dollars. But maybe that just hits my trigger of what I believe and not what's legitimate or what isn't. I think so too, Mothman. Like, it's hard for me to not think it's legitimate. I saw those places. I saw the place with the bus that didn't look like it had even moved. I wish I had the. Okay. I saw the place that it looked like it had snowed and the bus had probably been sitting there for months and no kids inside receiving tens or millions of dollars. But that's just, I'm not sure that I can turn it up on my end. I think I took off the microphone because for some reason when I've been using it, it's been screwing up on the lives. It works when I do recordings, but it doesn't tend to work when I'm doing the live for some reason. I'm gonna have to get a different microphone and set up with it or something. So I'll probably order one for next week. I apologize that the volume just sucks. So hopefully it's not too bad. Um, but all that stuff in Minnesota looked legit, and maybe it just hits my trigger of who I defend and who I don't, and what I think is going on. But again, it really bothers me to see Trump going after the Fed for something so stupid because it really is just nonsense. And the Fed has more things to worry about than a guy in office who's pushing around his muscle to give them a hard time to try to bully them into cutting rates, which hopefully they don't fall for that and just do things that are bad for us. Like, again, you want somebody like Powell in office, whether you like him or not, who really is doing the best he can. You can argue that they were late to cut back when COVID was going on, or late to raise rates. But to be fair, I don't know that that would have changed a whole lot, and maybe they shouldn't have cut to begin with. But I think we were in a unique situation that people were reacting to and trying to stop a huge crash from happening, or things that were really out of their control. Like, if you think about it logically, the entire economy across the world really pretty much shut down, which did stop the all the shipping and the supply chain, and then you didn't have. Sorry about that. So many things causing headaches on the live today. Um, you know, I, forgive me, I also lost my train of thought with that. When the phone rings, it stops the live, it screws things up. I'm going to have to get set up a little bit better. The reality is, for most of you who know, this isn't something I do as like my goal to do it as my job or something. I just do it as a hobby for fun. So my phone is where I'm doing the live. And if I get a call, it really screws up the live and doesn't always work quite the way you expect, or the way I expect. Maybe it works the way you guys expect. So I'll just go with something else because really I don't remember where I was with that. But either way, I think it's a waste of time for the Fed to have to be dealing with the president. I do think it's more about the next person to come in. I don't know if you guys have any thoughts on it. I would just hate to see. Oh, that's what I thought with it is you want a Fed who makes good decisions. And if you go back to what was going on with COVID, it really did shock the supply chain. And the demand did not fall quite the way that they expected. And general inflation is too many people chasing after too few goods, which is exactly what happened. And maybe they could have been able to predict it, but much easier afterwards to look at it and think, how did they miss that? And it's very easy to judge people that are put in a really tough position, because I don't know that I had any different opinion other than I thought they were late to raise rates. But understand, I do mortgages and I could see on my end that the housing had caught itself and everybody was coming in to refinance and rates were just a little bit too long. But I have my hand on it, and while they're looking at so many things, I'm not sure that they were able to see it so well, nor do I think they could have just predicted the inflation the way that it happened. So I think it was a little bit of a tough position to be in. And I think they managed to do a soft landing, at least at this point, for something that was a really difficult situation to try to manage. I don't know. Joe, if you have an opinion, feel free to chime in, or Lily, that's fine with me. So I'm going to talk about a few stocks because I've been banging my hands on the table for a long time, and I am very happy to say that Target is trading. It was up to 109 today. It is now at 108, and it still seems relatively inexpensive to me. I would still be banging my hands on the table that I think it's a bargain. The PE is super low. They're using a very small amount of their free cash flow to be able to pay a nice big dividend. And the company is just fine despite everybody hating it. And if we go back to the last two companies I was banging my hands on the table about, which is Boeing and United Health, it just goes to that, like, bad news on good companies is kind of what you look for. I'm beginning to think that Netflix falls into that category. I do think that they're not through all the negative news, so I think that there's a good amount of time that it could continue to have some pressure on it. But that's another good company that has bad news going on right now. And I don't think the news is all that bad right now. I think the news is so. Like, I don't know whether it's going to be good or bad for Netflix as to whether they take over Warner Brothers, because I do think it fits a lot of the holes in their platform that kind of fills things in, that gives them a lot more legitimacy. It gives them a history. Like, if they can pick up the Warner Brothers products and put that into Netflix and all of a sudden have movies that have been around for 20 years that are great series, I think that's huge for them. I think if they pick up the studios, that's pretty cool. And I think if they actually use it to put movies into theaters instead of just doing the movies on their stream, that's probably a good avenue to go for them. The negative is they're taking on some debt. The debt is the thing that I'm saying might not be such a bad thing, because it's the studios and things that right now they just do streaming, so they have very little costs. And this will put some expenses on them that are a little bit different, but they have good enough revenues coming in to be able to sustain those expenses. And yes, I know you think that there's a crash and burn coming, but I'm dating it back a while ago. I think the inflation is sticky, and as long as people have jobs, I think it's going to be difficult to see the type of correction you're calling for. I do think over the long run, to be fair, there are things that I definitely worry about. Like when I think through AI, I've talked about this in other things. Like, let's take one aspect of it. Let's look at Uber, right? And autonomous driving. If they get it down tomorrow, that doesn't mean that all the Uber drivers are just out of a job that week. But what it does mean is they're going to start wanting to push the autonomous cars versus the froze too. I apologize. When I get calls, it does that. And like I said, it's because um, I use my phone to do this stuff, and I'm not really ready to buy a separate something to do the YouTube stuff because, you know, it's just not my priority. I do it as an outlet for where I can chat and put up the video. Anyway, um, where were we? Oh, so the AI, what I picture with like Uber, for example, and this is just a microcosm for pretty much every other industry because it's very hard for me to find an industry where I don't picture AI impacting it immensely. But if autonomous driving was like perfect and started tomorrow, and Uber and Lyft and Tesla and everybody else started implementing the autonomous driving, I don't think all the Uber drivers are out of a job tomorrow. What I do think is over the next 6 months or a year, as they start competing with whether it's less expensive or just the platform pushing the autonomous driving because it makes their margins better and possibly their insurance and whatever else, that eventually over the next 6 months or a year, some of the drivers that were used to making what they were making are going to get frustrated that their profits aren't what they were before, and they'll leave the industry. And then I think that continues over time, the same way I've seen it happen in other industries, to where eventually probably 95% of the cars that you see for these platforms will be autonomous. And maybe everything will be autonomous or close to it at that time. So I do see an issue, Joe, where I can see a legitimate crash and burn, but I don't see it the way you do, where it's just coming sometime soon and it's because of all the awful things that are in the news, because all those awful things are always going on. And I've been listening about a crash since the 2000 crash, all the way through that crash, afterwards, into the 2008 one, into that, into the one after. Like, people always think the market's going to crash. Like, they just do. They're always worried that the sky is falling. And so long as people have jobs and earnings are okay, there's really no reason for the markets to crash. And then all the tickers that you trade are the things that I think make the market seem overvalued. If you take an Nvidia and add a 2x, a 3x, and a 5x ETF, that is going to push the PE ratio higher than what it would naturally be, which is why if you break down the market and you look at the Targets of the world and the Procter and Gambles and the Kenvues and the Coca-Colas, and you look at them specifically, they're not so overpriced. But if you then get into the Mag 7 and all the stuff that's boomed and all the NASDAQ, like all the tech stocks that have these 2x, 3x, and 5x ETFs, yeah, their PEs are elevated. And you add that all together with all the ones that aren't elevated, and it'll appear like we have an elevated market. But it's just a lot of people gambling on the market more than buying things to invest in. And as long as you have people working who continue to gamble on the market, odds are that'll continue. I don't think when the selling begins in January, there'll be an initial wave. And like, maybe, but I also think that could be an opportunity because there are plenty of things that are valued just fine and have really good earnings and nothing's wrong with the companies. I mean, Conagra's doing fine, Campbell's, like all of these things that are counterintuitive than what people think of as the market, and they tend to move the opposite direction. Now, I know you and I have talked about certain ones in some of the chats, but it's also why there's reason to have a diverse portfolio and have some things that should move the opposite direction so that if there is a big correction, something like Campbell's should drift higher if there's a big correction to the market. Now, maybe it doesn't. Maybe everything gets sucked down and it's the end of the world and it's as awful as you predict. But I just don't see Armageddon coming. And I think preparing for Armageddon is usually a mistake. Generally, it doesn't come. And if you're always preparing for it, you're losing out while the markets are doing just fine. So maybe this time you're right. I guess we'll see. I still think right now there are a lot of companies that look really well valued. In fact, let me pull it up while I'm thinking of it. Gives me something to do. Well, it really is few people showing up today. I'm a little bummed. So let's pull up my buddy Target that everybody loves to hate. So fundamentals. Forgive a little bit of coffee. So right now we're at 108.70, which I'm really happy about. Billy jokes about it as Kmart. My buddy Steve tells me that Kmart sucks, which I think is kind of funny. Institutional ownership, who cares? I mean, 80%, blah, blah, blah. Dividend yield 4.3 using a 55% payout ratio, which is absurd. I mean, kind of to my point of that allows for a lot of negativity and a real slowdown to still be able to pay a 4.3% dividend. And for a lot of people, if they're able to get 4.3%, that's good return. It's better than what a CD is paying right now, or treasuries, or high yield savings. So I like to use companies like that to be able to see if, oh, I'll be happy to discuss. Sorry, Joe, I was reading what you said. Um, so you said you weren't here for the tariff meltdown in April or the September 2024. I don't even remember a September one, but April was very clear. My account fell over 30% and I did absolutely nothing. So I don't know. I mean, and now I'm at all-time highs. I really have it as a set it and forget it. I think of it as being in a safe deposit account because most of what's invested is meant for my kid. Like we live our lives off of uh, work and what comes in, and all those investments are investments in companies that I figure in 20 or 30 years and after I'm dead should do okay over time. So I really don't worry about it too much. I suppose if a nuclear bomb went off and the world totally changed, I'd have to adjust to what's going on. But I'm more cavalier because I don't rely on it. Now, I am getting to a point that I think about transitioning in it where it's a little bit more into dividends and things so that it just pays some bills and working less and less. But as it stands, part of why I do these videos is I don't work too much anymore. I kind of work because I still enjoy it and I want to have something to keep me busy because I don't really want to do nothing. But I am getting to where my thought is maybe dividends would be good and I should transition to just having that come in. And I am sure not one of those guys who believes in those high yield funds. It's kind of funny, like the yield max and stuff. People just they seem to think if a company puts it out there and it says it pays a certain amount of yield, that the company knows what they're doing and their investors are professionals, so they'll be able to pay those yields. But the reality is guys who work for those companies aren't necessarily great traders, and they're probably just following a screen that's telling them what to do for the trades, which may be coming from an algorithm. It may just be set up to wherever the underlying thing that they're trading is trading to sell a call at a certain percentage higher than where it's trading. There's usually not a whole lot of thought process in it, and some of them are like the worst traders out there. It's just a job. So when everybody's looking at these yield max and these other things, thinking these are professionals helping to invest for me, they really don't understand that they're really better off taking stuff into their own hands and learning about it and paying better attention than trusting some of these funds who might be hiring kids out of college or people who they're training to understand how to follow a computer screen for the trades they put on. Now, I'll do my little disclaimer just because I don't want to attach it there. None of this is financial advice. I am not a financial advisor. Please don't listen to me or anybody else when it comes to making financial decisions who talks on YouTube. This really is just entertainment purposes only. You need to do your own research, reach out to a financial advisor when it comes to making your financial decisions. Um, right. So a company has to make the money to pay a dividend. And then same with these others, like they actually have to be profitable to be able to make those payments. But I think most consumers go in and they see a professionally managed fund and they assume that it's legitimate and they must be able to make those payments. But the covered call strategies have so many flaws with them, it's hard to even get into, which is you have the full downside risk and you limit your upside. So you're impeding your ability to get the returns that the markets give while still having the full risk to the downside, which is like the worst of the worst, to be able to get a quote unquote dividend, which is really just a distribution. Now, if the markets go nowhere, you're picking it up and it works just fine. But if the markets go higher, well, you're limited because of the calls that they've sold. And if the markets crash, like, forgive me, most of them, from what I can see, they actually do it leveraged. So you're not only going to just lose what the market loses, you're probably going to lose more. The other thing I get concerned about with the VU and the Qs is just it's a little over focused that too many people pile into it. And quite honestly, I help manage a charitable trust, and it's what I recommend for them because you can set parameters as to what percentage to own and just kind of leave it at that. But I do worry that if there's a correction, the things that the people are most piled into are the things that probably fall the most because when people go to exit, like it'll go further than it needs to and scare people more than it should. And that'll also create opportunity. So, uh, again, it's kind of why I try to stay diversified and have things that should do just fine if a real market correction came around. Um, I don't know what column is on Yeah, Bitcoin looks bullish to me. I it feels to me like it bottomed out and it's trying to move higher. I like that's why I know you have a thought that like you see a big crash coming, but just my gut instinct of how I'm seeing things bounce, there's enough negativity at this point on Bitcoin. Again, not financial advice because Bitcoin is one of those that's very tough and I don't advise people making decisions in it. But it sure looks like it bottomed out to me. And to me, this feels like a good area to be getting long. And I think if it starts going, it could likely have new highs and really extend from there because we have had enough negativity, not just on Bitcoin, but on microstrategies too. They were so overextended in terms of the value of the stock versus how much Bitcoin they actually had. And my understanding from the things I read is some of the large Bitcoin holders started selling short microstrategies because it's a better way to be able to sell the Bitcoin than selling the Bitcoin because when they were selling the Bitcoin, they were pushing the market lower on themselves and market and microstrategies was a little bit deeper and gave them ability to be able to sell short to hedge against their long Bitcoin. Now that being said, it drove the price of MicroStrategies where it's no longer so overinflated to the Bitcoin that they hold, and it's actually relatively reasonable to their actual value. Now, I did have a theory at one point which would fit in line with what you think, which is I kind of felt like Michael Saylor could get squeezed so bad that he's forced out of his position, forcing those to really shoot a lot lower. I'm not sure that I think it's going to end up happening. And again, I think that the valuation seems to be making sense now. And MicroStrategies has bounced a few times off of like, I want to say it's the low 150s, but it might have gotten below 150 that it really looks like a bottom to me and an opportunity to take a chance and buy it there. Again, not financial advice, just as a trader, my instinct, that's kind of what it feels like. And Tom has a great question. So, what do I think of capping credit card rates? I think it is a great idea. I don't think that 10% is really reasonable or fair. And I think a potentially good way, I think it's kind of like the tariffs. I kind of feel like Trump is probably putting that number out to freak them out so that they come to the table and start to negotiate with ideas of something that's reasonable. Because I think, 25, 27% interest rates from a credit card, I mean, that's like, borrowing off the street. I mean, I've never done it, but I don't know how much they charge to just take a loan where they, cut your hand off if you don't pay. But the credit card rates are way too high. They have been for a long time. And the fact that they've done as well in the markets as they have the past few years kind of indicates that maybe they're charging a little too much. I do think that there's a way to set a cap off of maybe where Fed fund rates are trading or a 3 month treasury or something along those lines to say that you can't be higher than that. But somebody would have to have a better understandings of what their actual costs are to be able to allow them to have a fair profit and still be able to run their business at the proper interest rates. I'm guessing at 10%, that really crushes them. I mean, you're talking about cutting their what they charge by more than half. Uh, My understanding is the average is like 24 or 25%. And again, I just think that's crazy. And a lot of people make those minimum payments, not realizing that they're being charged that higher percentage. I mean, it's just nuts to me. The credit cards are the worst when it comes to that. But I also think that, yeah, I get it. I wish there was a good solution. I'm kind of for free markets too, but I think that to some degree you have to protect the average person, because the average person, like, you just don't want the corporations or people who are smarter just taking advantage of everybody a little too much. And it's also, again, like, part of why the crash. Here's the why I don't really see a crash. Whenever it comes around, you're going to see the government step in to do whatever they can to stop it. And in the end, they come up with something that stops it from coming. Now, it's not right. It's not fair. It hurts future generations because people who get overextended shouldn't constantly be bailed out. But it just seems to be the way that we do things. And maybe there's a day of reckoning where it just goes too far. But I think between the financial crisis along with COVID, I'm going to use housing as an example, because everybody who complains that it's overpriced and it's unaffordable, they are 100% correct. The problem is the government now has things in place that they've learned how to stop it from crashing, that they learned between those two events. So you go back to the great financial crisis, and everybody lost their house and it got given to the banks. The banks do not want to own a bunch of properties. Even though it worked out in the long run, that is not what they want to be there for. They just want to collect their payments. They want to make their margins and be left alone and not have to open a whole division that deals with foreclosures. Now, that being said, what they've learned is not just cutting rates, but then they've learned quantitative easing, and then they've learned forgiveness. You combine those three things together, and I really don't see a scenario where the housing market can crash completely, because that's the way the events will play out. First, the Fed's going to come in and cut rates. When that doesn't save the market because the long end of the yield is completely different than the short end, and now they've cut them really far down, and it just isn't driving mortgage rates low enough to really push the markets where it catches things, they'll do quantitative easing to force the long end of the yield, which will bring down mortgage rates to super low rates, maybe bring some people in seeing an opportunity to come in at a low interest rate. If and when those two things are not working to catch the housing market, they'll implement forgiveness and they'll allow people to not pay their mortgage, because now they're just not going to want to have a huge collapse and ruin the system. So what causes the market to crash? You've lowered the mortgage rates, you've lowered short-term interest rates, maybe the market prices have come down 20%, and then on top of it, you now give people forgiveness. So if they were going to lose their home, now they don't even have to make their payments. They'll figure out a solution down the line. So you're not going to have that huge influx of people coming and selling their homes at the same time, because there won't be the same type of panic. And you'll even get the people who just take advantage of the system and don't make their payments. It is a shame. Because again, I think that there should be a natural ebb and flow to people who get overextended to create the opportunities for the next generation. And I don't think this is a great thing. It is just my analysis of what I see going on and where I see things in the future. I don't see the government being okay with just a housing crash. Then you add to it that the builders learned so much from the great financial crisis that they don't build the homes the way they used to. When we moved out to Vegas, they were just putting up houses. Sorry. And we, Kendall, I see your question. I'll answer it in a bit. But when we moved out here, so I was living in Chicago. I was a trader at the commodities exchange out there. We were rotating from floor trading to computers, so the jobs were really kind of ending and volume had died up. So I wasn't sure what I wanted to do, but what I started doing is looking online because you could see homes on the computer, and Vegas was really inexpensive. So I thought, geez, let's just sell my house out here. I used to like visiting Vegas. I can take that money, we can move out there. It's super inexpensive. It'll give us a nice long time to figure things out. So that's what we did. Out we come, we're driving in, and there were just people with these signs, and they're going like this up and down, like Lennar, DR Hort, like every home builder you could imagine. A zillion kids on the street flipping those signs, sending you to these developments if you wanted to buy a house. We did not buy a house. I'm just describing what it was like out here. And they were just building. Like there were workers just out there building home after home after home after home. And if you wanted to buy something, you pretty much could walk in and close within 2 weeks to 30 days, depending on how long, because they were just getting those homes ready for all the people coming in and buying. Now, when things finally turned, they were still stuck with all the homes that they had started building, which was part of the problem because the home builders were getting ahead of themselves to be able to sell to the demand. Well, what they do now is nothing like that. They don't start building the homes until somebody's put an earnest money deposit down. And the earnest money deposit is usually a decent size, not a tiny little amount. Then if they want any upgrades or anything else, they require them to pay for those as well. So the home builders have collected a pretty sizable amount of money within the first few weeks of starting to frame and build a home. That way they don't get stuck with a bunch of homes if the economy ever changes. I don't think that's really going to change either. So you have all these factors that are just so much different than it was before as to why the market crashed. Now, I know that's a really long-winded answer, but there actually are a lot of reasons why I don't see the collapse that you're predicting. I think there's just a lot of these things that have been put in place over the past 40 or 50 years to help protect the market from collapsing in a 1929 type of scenario. I do think AI could slowly cause something like that because the haves have gotten so far ahead of the have-nots, and there's pretty much people who own things and people who don't. And if all of a sudden the robots, I mean, my God, I saw a video of a robot at CES, and it makes me realize how quickly this stuff's coming along. And if robots start taking over more and more jobs, like I saw Amazon is continuing to have better sales, but they don't need more employees because more and more things are automated with robots. I do think over the long run, this could become a real problem where people won't really have jobs to be able to make a living, to be able to pay the bills, while the Jeff Bezoses and the Elon Musks of the world are just going to get wealthier and wealthier the way I think of a Monopoly game. Don't see a solution for that. So don't think I don't have the doom and gloom in my brain as well. But I don't really worry about the market so much because if that came true, some things are just going to have better and better profits, which would cause their stocks to go up. So Wheat Candle is asking, where am I parking cash or starting new positions lately? So if I'm starting a new position, it is in big and boring type of stocks like a Conagra or Target or things that pay dividends, have good earnings, but I think are undervalued. And there's a lot of them. I don't have any specific. Or a CD, to be perfectly honest. I have some in a money market account, and I just moved some into a 1-year CD because if the Fed keeps cutting rates, I didn't want to put too much in case the long end doesn't come down. I, I did a 1 year CD on some of it because I think that the high yield savings accounts could start paying less, and I do want to make sure there is some cash around. But that's essentially where I have cash. But I try to have a mix of everything. I try to have a little bit of metals. I try to have a little bit of cash. I think it's very hard to know what's going to do phenomenal. So I don't just pile all into one thing. I'm like a squirrel that I try to hide this here and this here and this here, because if the Armageddon ever comes, I hope that something's around. What worries me is if Joe is right and we have a big correction, that it really will be a a valuation drop across the board of everything. Because even collectibles, I mean, I like baseball cards from where when I was a kid, and I still kind of pay attention to it, and I like that market, and like. There's not a market I don't find interesting. I like paying attention to it. Uh, I think that the dollar could inflate enough that any type of asset could go higher. But then I see moves that we've had in the metals that seem to be so violent that I wouldn't be surprised either way. Um, if you go back to 1979 and do the math of gold, it's really only up like 4% a year. It's just been a dramatic move the way that it's moved. But I do worry about the way that they've moved the past couple years. That I'll read what Joe wrote because, yeah, a warning to anyone long any gold, silver mining. He just started putting on short place, but it is a very bubble type of move, and even if somebody ends up getting a lead, it is so hard for me to think that if you're buying gold here or silver, that in 3 or 4 or 5 years, that you're going to look back and be really happy with these purchases. Maybe it keeps going. Like markets are markets. I always say that. And maybe the dollar just inflates a ton and the news is where it is. But watching silver go from 30 to 80 in a year, like that's a pretty extreme move. That's very hard for me to feel like it's just going to go on. The only thing that makes me feel like it could have legs is I haven't got like I do see a lot more people talking about it, but not in the way that I go to a Super Bowl party with 20 friends and 6 or 8 of them are going, "Oh, I picked up some silver, or I picked up some gold." And I know that's a weird metric to use for when I think things are really out of whack. But I find that when crypto did that the last time, when Bitcoin, I think it got to like 70,000 or close to it. But when it was a crypto craze, like that's what I noticed. And when I go back to the dot-com bubble in 2000, I remember like this was before we had some, like there was no Uber and stuff, but you'd go to dinner and uh, your waiter or waitress would be talking about their internet stock. Or I was, which I said before, I was in Chicago and I lived in the city and all of my friends were in different high rises, and you'd go to visit them and the doorman would give you his internet hit pick. So it was like so crazy over the top, everybody talking about it. Like that's kind of what I look for. I do have the underlying concerns that if it's an everything bubble, that's why it's not happening. If it's not one thing, that others will be talking about it. And watching silver and the way it's just exploded. And then, boy, I really, I really hate Peter Schiff because he, like, don't get me wrong, the guy's a smart guy, but he's such a self promoter. I just want him to be wrong, despite that I have some medals too. Um, but they feel so overinflated with how far it's moved. Me personally, I wouldn't want to be buying more of it up here, but keep in mind, like I gold was $270 when I was thinking it was a good buy. So it's been the past, I think that was like 2001 or 2002, and maybe it was even 1999. But silver was like $6. Now it crept up to the high 20s and then it fell off and then the third. But the way that it's gone this year and just straight from like 30 to, geez, it's almost at $90. And I think that $100 mark, like, I don't even think it's going to hit it. I think it's going to threaten it where people get overexcited. And I think it creates the opportunity for where the people like, do I know there's only a few of you watching, but do any of you collect silver? Because I like the physical because I'm weird and that's the type of, but if you look at silver, it's like so stupid because how much silver you actually need to have some legitimate value. I mean, who wants, I haven't done the math, but who wants like 100 pounds of a metal because it has this value? Like it's just too much and so ridiculous. Like at least gold or platinum kind of makes sense because a little coin has some real value. I just, again, I think it's been such an explosive move that hard to imagine Joe's not right and that it has a correction. It just, markets move a lot further than people expect them to move. So it could be really rough trying to take the other side and time where the top is. Um, it feels like we're there. Collectibles are feeling that way again too. I've noticed them starting to pique my interest, which is what happens when they start going up again. But generally, like that could be an opportunity to sell some of it. Um, yeah. I mean, I see a scenario for it. Like the only so forgive me if anybody didn't see or they're not really watching the chat and reading it. The coming deflationary spiral will take every asset down except US bonds and dollars, which is very possible. I don't want to say I can't see it because I can. It's kind of why I say it could be an everything bubble. I just would expect if it is, as much as nobody wanted your silver, like real silver, I'm really surprised. If it is, and I know this will sound weird because it feels like the stock markets have moved so far already, I actually would expect more of a parabolic move because generally what ends up happening is the markets suck everybody in before we have that type of correction, and they haven't yet. Well, I know there's like we're all on YouTube, so we watch the people who do the finance stuff and talk about it, so we're a little sensitive to it. But go to a regular place and people are not talking about the stocks that they're buying or the real estate or anything like that. They're just trying to keep up with life. And as long as people are generally just trying to keep up with life and not talking about the thing that they found some money to put in because everybody's just getting rich with it, I find things continue to chug along. Now, when I say I see it, like I do see it. So I try to protect on all ends as well. But I don't think we've had that parabolic move. And if it comes, yeah, I'll be selling and going into 3 month treasuries or something super safe to make sure it's all in cash. So let's see, that's what historically happens during a deflation. All you need to do is think about the reasons why dollar derivatives rise. Do you know why? No, go ahead. You can explain. I mean, I assume they've risen because we've been printing dollars and doing all the things to save the economy ever since, geez, what, 2000? Well, probably 2008, not really 2000, but when we did all the things to save the housing market in 2008, it's never slowed down. The the other problem is our elected officials, anything they do to right all of this is going to get themselves unelected. they're not going to get reelected. So I think they all make really bad fiscal decisions for the rest of us because they want to get reelected. So it's just spend, 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 spend. And I don't really see them doing the things that they need to get the house in order, if that makes sense. Um, Reason one, yes. But don't you think that things are beginning to de-dollarize? Um, but yes, most things trade in dollars. So when you sell your house or whatever it is, you take back the dollars. Even oil, which has been one of those things that we've kind of pushed. But correct, anything you sell comes back in dollars. And everybody's asset heavy because they do keep talking about the ones that win are the ones who own assets. So even when I disagree, Joe, I want you to understand because I like the discussions. I did get a little frustrated because I really hope everybody does great. And rooting against somebody, even in the terms of like, let me know when you sell it or the pain's been too much, just rubs me the wrong way. But it's not it's especially because the stuff you're asking about, like, it's such a small, like, we've been very fortunate, and it's just stuff that I'm not worried about as I have things to protect as well. But that's separate. Reason two, the dollar will be the last currency to fall. Yeah, I would agree, despite what the news is making it out to be. But I do think that because just logically, if you think of all the other countries and everything else, what currency would you rather own? Are you more comfortable with the Chinese yuan? I mean, there's just too much unknown and too much that isn't shared as to, like, we're really open about how much we're printing and what's going on and where the financials are. And other countries aren't like that. And then if you get past like China, what other ones would you consider? I mean, so 100%, the dollar is the last one to fall for sure. I would agree with that as well. And I don't even disagree. Like what people think of as safe havens, when gold has run from $300 an ounce in my mind to 4,800 or 4,600 or wherever it is, that's quite a move. I don't really see it being the safe haven that people think. You know, my buddy used to joke that if the sky fell, he'd want all of his money in drugs and ammunition. Like that could be a safe haven. Um, I know I saw from your response, but I don't know that I agree. Like I see it. So it's not that I don't see it, but I also am not as gloom and doom. Uh, when I go out, places are still busy and they are still making money. Now it is like it is even in the businesses and not just in people like going like this, that the restaurants that do a good business are still mobbed and the ones that are like mom and pop and struggle seem like they're really struggling. And I don't know how far it has to go. And I just don't know. But I also think back, like, I talk to my son and I say things like, your mentality is a lot of where you end up. If you have a mentality that the government beats me down and my boss sucks and what, like, that is what's going to happen. When I got out of school, I worked two jobs. And if I needed to, which I was fortunate that I was made enough that I didn't, I would have had a roommate too. And I would like, you, okay, I tell a story about, I'll use my family as a microcosm for the world. There were five siblings. It's my brother and I had three sisters. And my my brother is very better than I am with money in a lot of ways. And if you took the world and called gave each of us $20 and told us to figure out like whether you're making trades or whatever you need to do to try to grow that money. Well, I would turn my $20 into $30 somehow. My brother might turn his $20 into 40. Two of my sisters would have $20 still, and one of my sisters would have zero. You just couldn't stop her from being her. She was the personality she was. If she made $20, she would spend 40. Well, so really, she wouldn't have zero. She'd be $20 in debt. There was just this thing about her that she seemed to always spend more than she could afford to, and she understood it. Like, you could explain it to her, but personality was personality. I extrapolate simple things and kind of think of the world in that way, and I kind of think the world operates that way. There's certain people that no matter how you explain it to them, they're just not going to save. Like, that's not who they are. And they're going to end up spending more than they can, and they're going to end up in debt. And no matter what you tell them to try to protect them, that's just the personality of who they are. Then you have others that are going to continue to push and push and push and save every penny they can and grow and save and be that person. And then you have the people in the middle. And unfortunately, when I talk about my monopoly scenario, it's really that if you're Elon Musk or Jeff Bezos and you've gotten to that point that you have so much, it is really hard for it not to continue to grow. Just by having it, it's going to get the interest it gets. It's going to continue to expand. And as it expands, you're going to suck up a bigger amount of, like, the houses you pick up are going to start at the cheapest ones and then move up and up and up until you've squeezed out everybody the way that a game of Monopoly works. Like, it's not a game where everybody plays for the cooperative that everybody does well. Like, eventually you just own too many properties and everybody else starts landing on your properties and losing their money. Eventually, the people who have the most have so much that even they're buying up the millionaires' homes, because what else are they going to do with it? Uh, wow, Bitcoin's 94,000 now. I hadn't even seen. That's what it. I, I don't think. I think it keeps going. It doesn't make sense. I think people are going to keep shaking their heads, and the reality is, at a minimum, I think we have until the end of this administration is done. I think they are going to do whatever they can to push these markets higher, and all of them. I'm looking at, I don't know where it is now. Let me take a look. But Intel, where they took a 10% equity, $48. I mean, and I try to dumb it down. I mean, a lot of people dig into the financials. Like, I do too sometimes, but I really try not to, because I find my 12-year-old or 14-year-old self was a better investor than my 50-year-old self, because I just bought what they, like, whatever people were saying to. When the government took a 10% equity stake in Intel with the administration we have in place, to me that was like beyond obvious that Intel's going higher. I don't have to look at their financials. I don't have to understand any of it. All I have to know is that the administration in place is taking a 10% equity stake in a chip manufacturer, and whether it's by giving them direct orders, like they'll actually buy the computers from them, or giving them government subsidies, or whatever it was, they're going to make it work. And my God, it's moved from $20 a share already to 48 in just over, I don't even know if it's been a year. And my guess